Hello all, and thank you so much for joining the 10 Most Overlooked Tax Breaks webinar today, brought to you by Rave Financial Services, LLC. This webinar is pre-recorded, so if you have any questions or comments, please feel free to send us an email at info@ravefinancialservices.com. So today I am going to be your presenter. My name is Denitza Rave, and I am the owner of Rave Financial Services, LLC. Before we get into the webinar, I just wanted to take a minute to introduce myself to everybody so you know who I am. First off, I studied at the University of Phoenix for my bachelor's degree in accounting. I have been in the accounting and financial industry now for over 16 years. I've established my tax and financial services firm over 12 years ago. I am a tax and financial services professional along with a credit repair specialist. I enjoy learning and I really enjoy teaching others. And just two little quips, I'm an avid reader. You will never see me without my Kindle or an actual book. And in the midst of all that, I also am a homeschool mom. So that was just a little bit about me. Now I just want to give you my why about why I wanted to do this webinar. Well, as you can tell, it's because I love helping as many people as I can. And I really love to help them save their hard-earned money and to help them grow financially and inevitably build their personal wealth and just personal growth, period. Also, when people go to the DIY robot tax software, I'm not going to mention any names, but the abbreviations are TT and a few others that are out there. A lot of times, they may be uneducated about specific deductions and credits that they may be eligible to take, while the DIY software, it does a pretty good job. It definitely doesn't beat having a live human right there with you, helping you along with your tax return. The software is run on AI, artificial intelligence. They're not always 100% correct, unfortunately. I have seen good people get into financial tax trouble because of issues with DIY robotic software. I feel the more educated someone is, the better off they will be. And if I can help someone even a little bit, that's all I want. I want people to succeed in life. I want them to grow and learn and to be knowledgeable. My end goal for everyone on this webinar is to gain better knowledge of specific tax topics. Learning about these overlooked deductions and credits and knowing if you qualify just might save you hundreds, if not potentially thousands, off your next tax bill. You will be better equipped when you do your taxes yourself, or if you have someone prepare your taxes for you, you're not going in there blind. You have some sort of a background and knowledge while they're preparing your taxes. So you can, if they see something, and you can always, ask, say, there's this deduction that you might have missed, or did you look at this? So the more educated you are, the better. So with that said, I am eager and excited to share these little nuggets with you. So here we go. So we're going to start by learning the difference between the two biggies. You have your tax deduction and you have your tax credit. So a tax deduction reduces how much of your income is subject to tax. So it reduces that. It also lowers your taxable income by a percentage of your highest federal tax bracket. For example, if you're in the 22% tax bracket, a $1,000 deduction can save you a nice $220. Now on to tax credits. So tax credits directly reduce the amount of tax you owe. And what I love about tax credits, it literally gives you a dollar for dollar reduction of your tax liability. And for example, a tax credit, if it's valued at $1,000, guess what? It's going to lower your tax bill by $1,000. Both deductions are amazing, but that is the difference between a tax deduction and a tax credit. One is more of a savings, it reduces, and then the other one is a dollar for dollar reduction. So now we're going to go ahead and get over into the first deduction that is often overlooked, and it's significant medical and dental expenses. And I do say significant because if you have, if you don't, you have to itemize pretty much to get these expenses. So if you don't have significant medical or dental expenses, say you have like $500 or $1,000 of medical and dental expenses, and it doesn't get you over that threshold that you need, then these deductions aren't for you. You wouldn't be able to really use them. So let's go into this now. So if your medical and or dental bills total more than 7.5% of your adjusted gross income, you can deduct these expenses. Possibly. You can include expenses incurred by yourself, your spouse, and your dependents when determining this number. You can deduct preventative care along with any diagnosis, care, or treatment that qualifies for the deduction. And you can find a complete list of these deductions at the IRS publication 502 under medical and dental expenses. And a few other samples of medical expenses that you can write off in dental. You can write off guide dogs and service animals that are prescribed to you by your doctor for visually or hearing impaired persons. If you need false teeth, you can deduct the cost of that. Something as simple as crutches, you can possibly deduct. Transportation expenses, toll expenses, parking expenses. If you're a nursing mom, you can deduct your breast pumps, lactation kits, pretty much, anything medical that's prescribed. If you go onto the medical and dental expenses in the IRS publication 502, you have a good chance of writing off or of deducting on your return. And when it comes to dental, you have false teeth, as I mentioned, braces. So there's a lot. So I highly encourage everybody to review the IRS publication 502 for medical and dental expenses. So then one of the next overlooked tax deductions is going to be your work from home deduction. Now, keep in mind, this doesn't work for everybody. Mainly it's for those who have to work from home or they have their own business. So workplace versus living space. So if you have a separate area that is used for work purposes only, you can typically deduct the work-related expenses, okay? And you can deduct it as direct or indirect expenses. I'm not going to get into that because that's a whole nother ball of wax. But the workspace versus living space doesn't mean a kitchen table in the middle of your kitchen. No, it has to be a separate area that is used exclusively for work. Okay. So maybe you have a little den that you use for work. Guess what? You can potentially deduct for that space. Okay. Or you have a workspace in your garage. You can deduct a portion of that as well. Okay. But you can't deduct your kitchen table, your coffee table, nothing like that. Storage. Okay. So do you use a portion of your home to store samples or work documents or paperwork, then you could potentially uh, write off or deduct a portion of your home used for storage for work only. If you're in a daycare facility, so if you own a daycare and it's ran out of your home, you can most definitely deduct the work from home expenses. Okay. So an overlooked tax deductions as well is commuting for work. Okay. Now this one has a bunch of caveats. So you definitely want to familiarize yourself with with this deduction. Okay. I'm just going to give you an overview on this. So it depends on the type of work you do. So example, driving to work and home to go to your job is not considered a business or commuting. So you cannot deduct any expenses for going from your house to your job. If you could, everybody would be doing it. So you can't do that. So it's not deductible. But if you have a trip between your regular job and then you have a temporary job, that mileage there could be potentially deductible. Okay. So in order for you to deduct work mileage or commuting mileage, you have to keep track of your business miles and your personal miles. Okay. In order to back up the deduction. So, I recommend, what I do is I take a picture of my odometer in the beginning of the year. And then at the end of the year, I take an ending picture. Okay. Just so I have picture proof for that. And then throughout the year, whenever I go to a client's house or because I work from home or a meeting, then I would write those expenses down, my business miles. Okay. But if I have to make a quick run to the store, if it's not for my business, then I am not going to count those miles in my mileage calculations. Okay. Because that would be personal. Okay. And here is where you can locate that information. It's the IRS publication 463. Travel, gift, and car expenses. Okay. And I just want to leave you with one more example. So Lisa is a real estate agent in the LA area. When she drives from her home, to her office, those miles are not deductible. But now, if Lisa conducts trips from her home to an open house or drives from her office to meet clients, those miles are definitely deductible. Just keep track in your records of that. Next deduction would be charitable donations. So money, services, and goods donated to nonprofits that are 501(c)s. Okay, you can possibly deduct that. And is there a cash limit? So cash limits have been actually extended, donations have been extended this year for those who typically do not itemize on their tax return. You can actually, as long as it's an IRS approved charity, you can deduct that charity donation on your tax return. And it's that the limit is between $300 and $600. So if you're single, you can claim up to $300 in donations, cash donations. Or if you're married filing jointly, then it is doubled. You can claim up to $600 in charity donation for this tax season. So it has been extended, which is nice. And again, that is for people who normally do not itemize. Okay. So going back to cash limits, is there a cash limit? Well, in normal times, generally, it's up to 60% of your AGI. The last tax season, you were actually allowed to donate up to 100% of your earnings. Okay. But in normal tax times, generally it's up to 60% of your AGI. Which is adjusted gross income. Is there a non-cash limit? Well, generally it's the same as cash donations. It's a specific percentage If you donate over $500 in non-cash donations, you will be required to complete an 8283 form. Okay. So you have to make sure you fill that out. And you can get more information available here at IRS Publication 526, Charitable Contributions. The next overlooked tax deduction would be the teacher's expense. So if you're a teacher, you can get up to $250 of unreimbursed classroom supplies, or you can get up to $500. Now, the up to $250, that is if you are single, okay? If you're a single teacher. The $500 is if you're married and you're both teachers, okay? You can get up to $500 of unreimbursed classroom supplies, okay? Your work cannot, or your school district cannot have given you money for that, and then you go and claim it again. No, you cannot do that. So here's some qualifications for the teacher expense. So who qualifies? Well, if you're a teacher in the grades K through 12, okay, you could also be an instructor, a counselor, a principal, or even an aide. Okay. You have to work at least 900 hours during the school year. And the school must provide elementary or secondary education. What are some expenses? What are qualified expenses? Well, some expenses include professional development courses for teachers, books, supplies, computer equipment and software, and athletic supplies for health and PE only. Now, some people ask, do I get any expenses reimbursed for COVID? Yes, COVID actually has an expense that's eligible, and I'm going to just give you a few examples, but it's not limited to these examples. So face masks, disinfectant, hand soap, hand sanitizer, guides to social distancing, physical barriers like plexiglass, air purifiers, among others. So sales tax, okay, this is another biggie that is often overlooked, okay? So instead of deducting income taxes because perhaps you don't have enough, you can deduct state and local sales tax. And the abbreviation for that, as many of you already know or have heard, is called SALT. Okay. So if you itemize and live in one of the 43 states with income tax, you do have the choice to choose between the two, writing off your federal income tax or your state. Okay. Generally, you want to deduct what is more. Okay. There's also a $10,000 SALT cap. You cannot choose both. Now, if you're in a state like California, you can actually, if you want to, you could always deduct the income taxes on your federal. And if you have more sales tax that you paid out living in a high tax area like California, then you can go ahead and itemize if you're eligible on your California return. Okay, so you can actually do that as well. So just a little tax strategy right there. So you first need to figure out how much state income tax and sales tax that you paid for during the year. So obviously, if you're an employee, if you receive a W-2, it's easy to determine what your state taxes are paid because it's literally laid out to you on your W-2 form. But some other state taxes that wouldn't be included that you could include are your car inspection fees, assessment for sidewalks or other improvements to your property, any taxes you paid for someone else or on their behalf, and license fees. But this does not include like your marriage license, your driver's license, a dog license, Okay, so that's not everything, but those are just a few examples. And unfortunately, when the Tax Cuts and Job Act was enacted in, I believe that was 2016, uh, it did limit the SALT, or the state and local sales tax deduction, to only $10,000 when in the past there was no limit. That is actually, as long as it doesn't get extended, it's scheduled to sunset or go away after 2025. Okay, so determining that sales tax also is one way to keep every single receipt, okay, that was involved with sales tax. But you can't include gas. And don't expect your accountant to do this for you because they will not do it. Um, so luckily, the IRS has an estimation tool for you to use via their website. Okay. And there's the publication that I just put up on the screen. It's IRS publication 503, Deductible Taxes. Okay, but wait, what about in the years I pay more? Well, you can deduct the sales tax you paid for on a motor vehicle. So if you bought a car, if you leased a car, if you purchased a boat or aircraft, as long as the tax rate is the same as general sales tax rate, your home, including your mobile home or your motor home, or substantial renovation to your home. And again, you can go to IRS Publication 503, Deductible Taxes, and you can get more information there. So you made it, folks. We're almost done. You got this. We just have a few more credits left to talk about. Here's a biggie, the child tax credit. So this was given under the American Rescue Plan of 2021, where half of the child tax credits were paid out to taxpayers or eligible families from July through December, unless you chose to opt out. Okay, so you're going to need to compare or reconcile your payments received with the amount that you claim. So for the January through June portion, you'll get a credit for those on your taxes. And you should have received a letter called 6419. And on that letter, it would have a breakdown of what the IRS says they send out to everybody. So how much is the tax credit worth this year for child? So the CTC for short was increased this year to $3,000 for children ages 6 to 17 and $3,600 for children under 6 years old. Okay, so residential renewable energy credits. So what the heck is this? This credit provides an incentive for taxpayers to purchase alternative energy products and equipment for their home, such as solar hot water heaters and wind turbines. In order to be eligible for the federal energy credit, you must file IRS Form 5695 with your tax return. The federal allows a 26% deduction cost from your federal taxes for the current tax year. Federal solar panel credits will begin to phase out and end in the year of 2030. State energy credits may be different, so you always want to double check with your state on any renewable energy credits. Okay. So if you chose to buy a plug-in electric drive vehicle, there is a credit for that. You may qualify for this credit, but only if you purchase a car or truck that has at least 4 wheels, weighs less than 14,000 pounds, and uses energy from a battery with at least 4 kilowatt hours and can be recharged externally. You must have purchased the vehicle in 2010 or after. and started driving it in the same year that you are claiming the credit. The IRS form that you would have to file for this credit is the 8936, entitled Qualified Plug-in Electric Drive Motor Vehicle Credit. So you would file that with your taxes. Okay, now we have the adoption tax credit. So what is an adoption tax credit? Well, it's offered to encourage adoptive parents to adopt within the United States. Okay, what expenses are included? Well, I will list a few. Reasonable and necessary adoption fees, court costs, attorney fees, travel expenses, and other expenses directly related to adopting a child. The maximum amount for 2021 is $14,440 per child. Any credit in excess of your tax liability may be carried forward for up to 4 years. So if you can't claim all of the $14,440 on your 2021 tax return, then you can potentially have the benefit of carrying forward for up to 5 years. Okay, and then we do have federal phase-out limits that apply. You can exclude income for employer-provided adoption assistance, which is nice. And to get more information on the adoption tax credit, you could check out the IRS website, but the IRS form that you would have to fill out is 8839, Qualified Adoption Expenses. So those were some of the few tax topics today. So unfortunately, they are easy to forget deductions, okay? So we went to our overlooked tax deductions. We talked about our medical and dental expenses, working from home, commuting for work, mileage, charitable donations, teachers' expenses, sales tax, child tax credit, residential renewable energy credit, the plug-in drive vehicle credit, and the adoption credit. So here's one of my favorite quotes that I wanted to conclude with, and it's so true. One of the hardest things in the world to understand is the income tax. Okay, if you don't understand it, believe me, you're not alone. Even for those who study taxes, sometimes don't understand them, and we may have to read them 1,000 times or so. So just know you're not alone. My hope is that the information that I have provided you today helps alleviate some confusion. My hope is that you've gained valuable knowledge that you can put in use today. So if you have any questions, I have my email up here, denitza@ravefinancialservices.com. Okay, and as a thank you gift, I want to send you this PowerPoint for free. So please email us at info@ravefinancialservices.com and let us know that you would like your free copy of the 10 most overlooked tax breaks presentation slides. I do have my website up here for everybody. I have my phone number, I have my local number, and I have a toll-free number. I also included my Facebook and my Instagram page. Please look out for more informational webinars on a variety of topics. This was just first in my webinar series. And just a reminder, that the information contained in this webinar and presentation is provided for informational purposes only, and it is not intended to substantiate or substitute for obtaining accounting, tax, or financial advice from your professional accountant. Presentation of the information is not intended to create, and the receipt does not constitute an accountant-client relationship. Internet subscribers, users, and online readers are advised not to act upon this information without seeking the advice of their own professional accountant. Again, thank you so much for coming into the webinar and listening to the 10 most overlooked tax deductions.